Oh boy, I hope you are ready for this one. Ladies and gentlemen, the street is out with another article on AMC Stock. And let me just skip to the bottom paragraph, the summary of this article. This author, Bernard Zambonin, says, quote, I myself see possible short-term developments around the APE conversion as being super bullish for AMC. With borrow rates and FTDs as high as they are, volatility yielding any sort of upward pressure could trigger a short squeeze, and many shorts are already on the ropes. AMC is up nearly 30% year to date, meaning some bears may have less of an appetite for further losses on their shares. Now, the headline of this article says AMC stock failures to deliver hit all-time highs. So we're going to get into this article, everything you guys need to know about the current situation with AMC, but I also want to talk about tomorrow because tomorrow is going to be an absolutely epic day here in the markets. Ladies and gentlemen, let's get into all of this information. Hit the like button and subscribe to the channel if you have not done so already. If you guys also want to come trade with me live in real time, link down below in the description of this video. We have had bullish trades on AMC, on GME for a while now. The AMC one, not so great. The GME ones are definitely making up some of those losses. So we'll see how things go and stay tuned for a GME video later in the day today. But let's get into first things first. I want to talk about what's going to be happening tomorrow because this you have to be fully aware of. The debt ceiling, we're getting Biden and McCarthy meeting at 5:30 p.m. today. It was first scheduled for 4:30. They pushed it to 5:30. You had some back and forth comments from McCarthy today, which is really just a weird day overall with the debt ceiling, okay? Very strange day. Now, I think that's going to be big news the closer you do get. It sounds like they're far off of a deal, but I also want to say that if they do come to an agreement, part of why the markets have been so resilient the past year and a half now is because the government is spending a lot of money. If Republicans force the government, the Democrats, to not spend as much, that could be a very negative thing for certain segments of the market. So keep that in mind. If they raise the debt ceiling, that's good. But if there's massive spending cuts, that might actually be bad for the economy. Now, what you're going to get tomorrow as well is going to be some Fed speakers. We'll look at the economic calendar, but notice on this economic calendar, Powell is not on here. And it was just announced earlier in the day today that Fed Powell will be giving a speech at a Democratic conference, which is very weird because he is pretty Republican. That's what he's classified as, is a Republican. So he's going to be giving us this speech, and this was unannounced. Now, why I think this is in particularly strange is because what we've gotten from Fed speakers today, like Fed Kashkari, like Bullard, right, other Fed members, is kind of the foot off the brake on the pause narrative. Some people are still throwing out the pause here and there, but Bullard said we might need 2 more rate hikes. Fed Kashkari said that even if we did pause rates in June, that there could be further rate hikes down the line. So they're trying to kind of condition the markets for maybe some bad news on inflation, or just maybe the Fed's not going to pause coming in June. And that's what has really sparked a lot of this rally in technology that we have seen as of late. Overall, when Powell is not scheduled to speak, and then it's just comes across the newswire, Fed Powell is going to be speaking tomorrow, I'd like to think that is important. It may not be, but it's something to take note of. Now, in my tinfoil hat opinion, maybe the Fed members, they're being so bearish today because they already got the PCE data that's going to be coming out Friday. You're going to get core PCE price index month over month for April. You're expecting a 0.3% gain. Last month's gain was 0.3%. So if that went higher and Fed members want to warn the markets, they want to prepare markets for, more rate hikes or whatnot, it would make sense to why they are all of a sudden coming out and being super bearish, or a lot more bearish than they have been as of recently. So There you have that big warning for tomorrow, especially Fed Jerome Powell debt ceiling conversations at 5:30 p.m. Eastern Standard Time today. You're likely going to get some headlines on that coming out maybe 6, 7 o'clock today that will affect the day tomorrow. Now, today has been a pretty bullish day for stocks such as AMC and GME. GME is up 9.22%. AMC stock up 1.19%. GME did get some news as well about raising prices for their subscription model, their premium subscription model. It's going to have some new perks and all that. We'll talk about it in the next video. But I want to focus on AMC because AMC's failure to deliver just hit a new all-time high. It says new data shows that AMC's failure to deliver rates have peaked over the last 2 months. With this key indicator sitting at an all-time high, here's what investors should know. This article came out 9 hours ago. It goes on to say that rocketing trade demand for AMC shares over the first quarter of this year has caused indicators such as failure to deliver to soar. In the last 2 months, amid the soap opera surrounding AMC's move to convert its APE units into common stocks, FTD numbers have reached record levels. When failure to deliver reach very high levels, it may be an indication of fraudulent trading behavior. Let me come on now. Quit playing me, okay? If the street's going to acknowledge it, but the SEC won't, we got a problem, okay? It says, what is a failure to deliver? Just so everyone's on the same page. Failure to deliver in trading occurs when one party fails to meet its obligations on a settlement date. This applies to stocks, futures, contracts, options, and more. On the buyer's side, FTD implies a lack of money to proceed with the order. On the seller's side, FTD means a seller is lacking sufficient equity. Basically lacking the shares, right? In this scenario with AMC, with futures, obviously, same deal. And technically, if, fun fact, for like wheat futures or something, if you get exercise on that, you actually have to go get yourself some wheat, which is pretty interesting. It doesn't happen all the time. Farmers do use wheat futures and different commodity futures as well. Fun fact for you guys, that this is not only in just trading. This can actually happen in real life as well. Now it says, high FTD rates are often associated with other trading behaviors and phenomena, with 3 being particularly notable. Increased volatility. Rapid and severe swings in a stock price can lead to high FTD rates. Increased volatility also tends to boost borrow rates, which makes it harder and more expensive to acquire shares to cover short positions. Short squeeze potential. One instance is which an FTD occurs is when a short seller does not deliver shares, but they have sold by the settlement date. High FTD rates can thus imply that short sellers are having trouble covering. Many shorts simultaneously scrambling to cover is exactly what causes a short squeeze. And the last one being fraud. FTDs may also be correlated with naked short selling. This has been an illegal practice in the US since the financial crisis of 2008, which allowed people to sell short a particular stock without even having the stock available to be shorted. Naked shorting could plausibly be connected to the failure to deliver because naked shorting generates so-called phantom shares, especially shares that do not exist. Phantom shares can damage the liquidity of a shorted asset and dilute its share price. Okay, baby, what the hell? If that don't sound like what's happened with AMC stock, then I don't know what has been happening, because that almost sounded too perfect. Okay? Let's continue on. AMC's failure to deliver latest data. April 2023 saw a 2-year peak in the number of failure to delivers for AMC Entertainment. 87.5 million FTDs were recorded during the month. That's a significant jump over March, when the movie theater chain recorded 53.3 million FTDs. Dude, look at June, right? When there was a lot of, or even January of 2021, when a lot of people were talking about naked shorting to begin with, that the short interest is like 100, 200% on stocks such as GME. The failure to deliver rates have not been this high with AMC. I think that in and of itself raises a huge question mark in everyone's mind besides the SEC, apparently. Okay? Even Adam Aaron's like, yo, are you guys going to investigate this? And they're like, yeah, probably not. Right? They haven't publicly said anything, but it doesn't look like anything is necessarily being done as well. Now it says notable were the April 6th and April 10th trading sessions when 18.3 and 17.4 million FTDs respectively were recorded. In these two trading sessions, news related to the conversion of APE units into AMC common shares caused a massive spike in AMC trading volume. Since AMC launched its initiative to create its preferred shares, the AMC preferred equity units, many arbitrage traders have been exploring going short on AMC common shares and holding long on the APEs, thereby betting on profiting from the irrational spread between them. The majority approval by AMC shareholders to convert the APE units into common stock, as well as the execution of a reverse stock split, has undoubtedly been a significant driver of short selling in AMC's common shares. April's ape-related news then could possibly explain the recent jump in FTDs. Final considerations. The failure to deliver data is closely watched by AMC traders, retail investors, and other shareholders. Many in AMC's retail shareholder community believe that the movie theaters company shares have been hurt by predatory short-selling practices such as naked shorting. AMC's recently asked the New York Stock Exchange and FINRA to look closely at possible irregularities in AMC's stock trading. However, it is not yet possible to officially substantiate allegations of naked short selling. Yeah, keep in mind, this has not been quote-unquote confirmed, right? You have not had FINRA or anyone else, the SEC, come out and make a public statement, but for obvious reasons, they probably wouldn't want to do that. Although it is possible, and we have not gotten any definitive evidence as of yet, just very suggestive evidence. This evidence is suggestive, right? When you're seeing more FTDs than the volume on any given day, or almost just about the same amount of FTDs as volume, that's very suggestive of fraudulent trading practices, could be such as naked shorting. Now it says, as stated previously though, record FTDs for AMC shares may also indicate high volatility and increased potential for a short squeeze. The current high demand to trade AMC has conflicted with the limited availability of shares. Short sellers are putting themselves at risk of catastrophic losses, considering AMC's shares borrow fees sit at a whopping 75% and peaked at an eye-popping 1,000% in mid-April. Also of note is a class action lawsuit hearing focusing on the implementation of the already approved conversion of APE units. News came out of that lawsuit could be a driver of AMC's stock price. A trial is scheduled for the end of June. Again, I myself see possible short-term developments around the APE conversion as being super bullish for AMC. With borrow rates and FTDs as high as they are, volatility yielding any sort of upward pressure could trigger a short squeeze, and many shorts are already on the ropes. AMC is up nearly 30% year to date, meaning some bears have less of an appetite for further losses on their shares. Now, let me just add on to this, because we talked about the naked shorts, we talked about everything else that is kind of going on here, and it's all very credible and should make you bullish. Not financial advice, not a financial advisor. AMC stock could go to zero tomorrow. That's my disclaimer I like to put out there. It could go to zero tomorrow. So if you invest in it, just be fully prepared to lose all your money or to possibly make some money, okay? That's the best disclaimer anyone could give you. But I want to add to this a little bit because, yeah, what is being said here is very bullish. And I think the way they put it puts it in a perspective that a lot of you guys, a lot of retail investors, even myself, tend to forget here, okay? But this is big too. The collateral crisis. And I know you guys are like, this fucking guy, collateral crisis again. Okay? It doesn't have to be a crisis to be a problem. It doesn't have to be labeled as a crisis to be a problem. This week in particular, you're going to see some massive events taking place in the market with AI. Now, we talked about this in other videos, but a lot of bubbles we've seen in the past, whether it's crypto, biopharma, green lettuce, or devil's lettuce stocks, whether it's EV, right? They have not had the impact on the market such as AI. Why is that? Because those bubbles that we have seen have not affected the largest companies in the stock market. AI is focused generally on the largest companies. Who is AI beneficiaries if you think of it? Nvidia, Microsoft, Google, Apple, Amazon, your largest companies that control anywhere from 3 to 8% of the S&P 500. 10.5%, 10.6% for Microsoft and for Apple. They have been the ones to win from this AI development, right? AI has been around since 1951, but all of a sudden, people want to pour hundreds of billions of dollars into these companies. I'm not going to argue with it, but I'm going to sit here and tell you that as fast as these stocks went up and drove the NASDAQ and the S&P higher, could easily give those gains away. A fun fact, the Russell 3000, which accounts for about 98% of investable capital, 50% of those stocks are lower than their October 2022 lows, meaning that the markets by and large have trended down in 2023, and these large cap stocks fueled by AI have been going higher. Now, why is this so important? Think to the collateral crisis that I've been talking about, or one that could develop. When these stocks fall, it puts pressure on shorts and their collateral that they have pledged for their short positions. It's different, okay? If you're buying a call, the most you can lose if you buy a call is what you paid for that call. If you're a short and you short a stock, you can lose unlimited amounts. So you have to put up collateral. That's like any kind of loan. If you go to a bank in this modern day and age and you have no job and you haven't had a job and you want to get a loan, they're going to tell you, get lost, right? Beat your feet. That's what they're going to tell you. Bye. We're not going to do that. Come back to us when you've been on the job for 2 years. So that same level of risk applies to short positions. So even seeing pressure on the markets could cause stocks to rally, could cause shorts to want to get out of short positions faster than they otherwise would have. Now, why do I bring this up? Because NVIDIA is going to have earnings on Wednesday, and NVIDIA has been definitely the biggest beneficiary of this AI rally that we have seen recently, alongside those other names that I previously mentioned. So if NVIDIA does fall before or after earnings, that's going to put pressure on the markets. That could lead this information to be that much more relevant and to get you a rally in AMC stock. Now, does the street have insider information about this court date? Maybe. It's possible. I wouldn't say definitively, but that's a strong statement. In quotes, again, third time's a charm. I myself see possible short-term developments around the APE conversion as being not bullish, quote, super bullish for AMC. I'll end the video off on that note. Ladies and gentlemen, hit that like button and subscribe to the channel. Source your comments, questions, or concerns down below in the comment section, baby. Thank you for watching. If you do want to come trade with me live in real time, never a recommendation. These trades could go to zero. That's the best disclaimer I could ever give you guys. Jumpstart your trading careers. Link down below in the description of this video. Thank you for watching, and I will see you in the next one.